In this video, I'll be going over some of the calculated problems that you have in the Connect assignment this week. The first one relates to a child independent care credit, where we have a married couple with a son under 13, and we have Buddy's earned income of $42,000. Now, Allie was a full-time student for 9 months with no income. They had qualified child care credit expenses of $34.50. The question is, how much is Allie and Buddy's child independent care credit for the year? Well, I reproduced the information given. Now, the $250 isn't given in the problem, but it's given in the text. Allie is deemed to earn $250 a month for the months that she is a full-time student. So we're going to insert the $250 per month for Allie. And again, we have 9 months of being a full-time student. So total deemed income then in an intermediary calculation is 250 times 9, or $22.50. So that'll be Allie's deemed income. We're going to take the lesser of the qualified child care expenses, or $3,000. So we had $34.50 of actual, but they'll only be able to consider $3,000 for the credit calculation. So we'll just insert the $22.50 there. And then finally the answer. Well, the answer, we're going to need to look at the table to find out the applicable percentage that would apply to these taxpayers, and that amount is based on income. So if you remember, they had $42,000 of income. So let's go to the table on page 9.4. And you can see that with $42,000 of income, that puts them in the 21% applicable percentage. So now that we know the 21%, we can go back to our problem and complete the calculation, which is going to be 21% of the $22.50. And that'll give a credit for the child independent care expenses of $473 using my numbers, which are altered. Next problem deals with the lifetime learning credit. Well, this one, in this case, we have qualifying expenses of $2,600. The calculation then for this one is, since the amount of the qualifying education expenses is below $10,000, then we can just take the $2,600 and multiply it by 20% and compare that to the $2,000 maximum. And so we know then in this case, 20% of $2,600 is $520. That falls below the $2,000 maximum credit. Therefore, the total lifetime learning credit this year for Nathan is $520. And again, feel free to go through these problems again by replaying portions of the video. The third problem, Darren paid the following expenses. Now, this is for his son's college during the 2019 semester, which begins in January 2019. And Sean's uncle paid $500 in fees on behalf of Sean directly to the college. Sean is claimed as Darren's dependent on his tax return. Question is, how much of the expenses qualify for the AOTC, American Opportunity Tax Credit, for Darren? All right, so let's take a look at this thing. We have tuition in this case of $13,000. That's given to us in the problem in Connect, although you'll have a different value, or you'll likely have a different value. Housing of $8,000, books of $1,500, and then we have those fees paid directly to the college by the uncle. Now, one thing we need to consider is that for purposes of the American Opportunity Tax Credit, the housing costs do not count. So we cannot include them in our calculation. And the thinking by Congress on this is that, well, whether the student went to college or not, they would still need housing. So for that reason, housing is not included in this credit. Now, I will say in some deductions, it is true that housing or a portion of housing is allowable, but for purposes of the AOTC, it is not. So we're going to take out the $8,000. So let's go ahead and do the calculation then. And we're just going to take the amount of tuition of $13,000, and to that we're going to add the $1,500 for books, and we're going to add the $5,000 for the uncle, the payment for tuition directly to the college. That does count. And so for qualified expenses for the credit, again, we're not calculating the credit here. We're just determining how much of the expenses qualify for the AOTC. All right, we have a single filer for AGI of $26,000, contributed $900 to a Roth IRA. What amount of her retirement savings contributions credit can she take? Well, she's got $26,000 of AGI. That's given to us. She contributed $900 to the Roth, as we said. Well, we're going to need to go to page 9. We're going to need, to calculate the minimum of the 10% of $900 or 10% of $2,000. And again, this is for that the retirement savings contributions credit. And this is as we said in the previous video, this retirement savings contribution credit is for low-income earners to encourage them to save for their retirement. And this is Congress's attempt to encourage low-income earners by giving them a credit by making contributions. So 10% of the lesser of $2,000 or the actual contribution of $900. And in this case, it's going to be 10% of $900 or $90. That will be her credit for contributing to her Roth. So she did contribute $900, but only $810 came out of pocket. The other $90 comes from the federal government because she was allowed the credit. For the next problem number 5, we have a couple that's adopted a child. They incurred $16,000 in actual adoption expenses. Their modified AGI is $225. What is the amount of the adoption credit they can take? Well, first we need to consider what expenses do qualify. It would be the lesser of $16,000 or the 2019 limit of $14,080. So $14,080 is the amount of qualified adoption expenses that are in play when we calculate the credit. And then, of course, to calculate the credit, we're going to multiply that $1480 times the upper threshold limit of $251,160 minus the income of $225, and we'll divide that by the range of $40,000. And again, this formula is in the book and in my previous video. And once we fractionalize the $1480, we wind up with the amount of the credit of $9,208.32. Using my numbers, and you'll get a different number, of course. But the method of calculation is the same. So even though they paid $16,000 of actual adoption expenses, because of their income and because of the adoption expense limit for 2019, they'll only be able to take a credit of $9,208.32 for 2019. Now the next two problems are not in your Connect assignment, but you're welcome to run through these calculations in the template I have in BlackBoard. So let's look at the first one. We have a married couple filing joint, modified AGI of $37,500, and an IRA contribution of $1,600. What kind of a savings contribution credit will that yield? Well, it'll be the minimum of 50% of $2,000. So half of $2,000 is $1,000, or the $1,600 times 50%, which is $800. So it'll be the lesser of half of $2,000 or half of $1,600, and that comes to $1,800, 50% of $1,600. So continue to repeat the calculation as you go through. If you choose to practice on these problems. And again, the next one is for demo only. This one relates to the education tax credit. And we ran through some of these earlier, so I won't go through these again. But you're welcome to use a template, follow my calculations, and consider the amount of the credit that's available. Okay, so if you have any questions on either of these demo problems that you can run through, which are not part of your assignment, or the problems above which are part of your assignment that I went through in detail, please let me know.